Very good afternoon to you both. Tom Lee, I'll come to you first of all. What do you make of today's bounce and the intraday buying following that massive gut check this morning? I guess whether we talk about equities or Bitcoin, your pick.
Well, I think both markets were watching the VIX really carefully because, you know, the VIX peaked out last week at 30, and that wasn't, or under 30, and it wasn't much of a move. And today there was some attempt to sort of see volatility increase, but the VIX could only get to 26, and then I think pretty much finished the day flat. So I think there was a shakeout happening the last couple of days, a lot of deleveraging, which is healthy. And one way to see it is that institutional money market cash now is at 3.065 trillion. That's within essentially a hair's throw of the highs of May 2020. So hedge funds and institutional investors have raised so much cash in the past few months that we're pretty much, the dry powder on the sidelines is where it was last year.
So what, you think that'll spark a leg higher here? Do you think the market's sort of bottomed, even the tech stocks? Is that what you're saying?
Sarah, it's a great question because it'll resolve one of two ways. Either the market will suddenly lose all underlying buying because all the money's on the sidelines and we could have a big downdraft. But I think the odds are favoring a melt up. So I think as long as the economic momentum continues, and part of it is vaccination and consumer confidence, I think we could have a melt up. So I think that there's a lot of consolidation the last couple of days, but it's, I think, a precursor to a big move higher in equities.
What's your take on that?
Well, we're still certainly very positive on the equity markets. At this point, we see the inflation concerns, but, you know, that's not news anymore. And we feel like, you know, the inflation is certainly going to cause a lot of volatility in the markets as we see today, but it's still going to turn out not so bad at the end of the day. And it's not going to drive a sustained sell-off. So, you know, we still, you know, despite, you know, where you go in the market, I think staying invested is important at this point, especially with inflation. And there's not much value to holding on to a lot of cash.
Mike, if you look at the U.S. dollar, for instance, there was a move off the Fed minutes when the Fed mentioned that it was thinking about tapering just if economic conditions continue to improve, not signaling any major change in the timeline. But that did seem to spark a move in the dollar and also in Treasury yields. Is there anything to think that the fundamental concern there of higher rates and more inflation has changed enough so that the market would melt up, as Tom Lee says?
Nothing really to think that much has changed. You really kind of have to squint and see the changes at the margins. Even in the dollar, I mean, it was stretched so far to the downside near the lows. So, I think maybe the fact that there was just slightly more of a nod by the Fed in the direction of multiple voices on the committee talking about having to start talking about tapering. I mean, it's absurd. But yes, I do think that was enough of a little signal that we are on this track where we're going to have to monitor this, and it's when, not if. So maybe that was a little bit of it, but the rest of the market, no, and yields range bound, credit markets, as I always keep pointing to, perfectly firm. They can't get a lot better from here, but they're certainly holding up fine. So that tells you that this hasn't really been, you know, a broad, you know, asset class rebellion about the outlook. It really isn't been about the macro, this little pullback in stocks.
Tom, just wanted to return to what you were saying moments ago, because I think last time you were on, you said the NASDAQ 100 still potentially had 5 to 7% downside before it would rally. But now you're saying you're favoring the likelihood of a melt up. What size of upside would a melt up be, and how do you balance off those two possibilities?
Well, Wilbur, we still think investors need to take down their technology overweights. You know, it's a consensus and crowded trade. So we do think that NASDAQ 100 or the triple Qs need to get to around 300. I might even say Bitcoin's action might be sort of a precursor to what the NASDAQ has to do. But the rest of the market can rally. And, you know, if the S&P rallies 10%, I don't think tech goes down. I just think it doesn't rally nearly 10%. But you know, the reason it's sort of crowded is ultimately consumer dollars and interest is going to be focused on things where there's pent-up demand. And that's, you know, we'll just see it. If the CDC eases guidance on other activities, including cruise lines, I think investors which have been avoiding a lot of those stocks are going to rotate. So I think there's mechanical reasons for why investors need to lighten up on technology.
Shepard Smith here. Thanks for watching CNBC on YouTube.